Hi guys, Lee Gettess here with the Market Sense for the week of February 6th, 2018. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. Looking at a weekly bond market chart here, obviously bonds have had a fairly substantial downtrend here, and we kind of got flight to quality buying come in when stocks started dumping. We'll get to stocks in a minute. That caused a pretty substantial rally, but if you look at this weekly chart, it's really not all that impressive. The resistance to continue a downtrend is around 147.05, and they didn't get very far above that. You got to expect them to be sloppy because the volatility is so high. They didn't get very far above that. The next target's up around 148.06, and they haven't come anywhere near that. Now, obviously, they could rally all the way back to, I don't know, 149.30, I think, is the upper moving average here. And that wouldn't even look great. That would just put them back towards the lows of this. So that wouldn't be a big deal. But all in all, not a very impressive rally. It makes me worry that they're going to go lower. We looked at support this week around the 143.5, 143.16 area. And gosh, the way they're acting, I wouldn't be shocked to see them get there. Now, I will say this, if there is continued downturn in stocks, if they go lower, then this will probably go up. They seem to be in that flight to quality mode now if stocks look like they're in trouble, which they may or may not, and let's take a look at them. This is the S&P 500 E-mini weekly chart, and I've been telling you for several weeks now that they could go below 2600 and would actually still look fairly good if they did. Well, guess what? They went below 2600. In fact, they went a long ways below 2600, but they also recovered substantially on Tuesday. Now, let me talk about this on a short-term basis for a minute. On the daily basis, usually when we have a global sell-off, we get a lower open in stocks in the U.S., and they recover, and that leads the rest of the world back higher. That's not quite what we had here. The low was actually made in the middle of the night, and the day session on Tuesday didn't come within 60 points. This low down here is around 25, 29, and we weren't within any closer than 60 points of that during the day session. So yeah, I'm a little unsure that this is really a good low. We may have to go down and at least test it, if not take it out at some point. But for now, they've recovered nicely. We're looking at the 2775 area as resistance to continue a downtrend, which they haven't been to yet. But of course, being all the way down here first certainly looks like it's a better chance that the low has been made first. The middle moving average here, the green line up there, I can't find my cursor, but the green line, the middle moving average is around 28.15, and that's not out of the question. Heck, the upper moving average is 28.55. We could see that also. But again, I'm a little concerned that this isn't a classic low. It could very well be a low. We do sometimes make lows in the overnight, but it's not what I'd call a classic low, so I'm a little nervous. Can't be as aggressive in buying it as I would be if that low had occurred like in the first hour of Tuesday's day session. So that's what we've got for you today. I hope you can find something